Hi, and welcome to the Stockscores Market Minutes for August 28th, 2017. We're going to do our regular weekly market analysis as well as look at a day trade I did on SJM. But first, I would like to announce that we have launched the new Stockscores.com. It launched on Friday. The website's main change is that it is now what's called responsive design. That means it works much better on your phone, on a smaller device like an iPad. And so now, when you're using those smaller devices, you will find it works better with touch and the screen format's better. So hopefully you will enjoy that. We've also added some new charts. These interactive charts that are now on the website allow you to draw on them as well as add a lot more indicators. There's some new videos and there's much more to come. I have a number of things I still have to finish. You'll find a few things maybe don't work 100%. We just launched on Friday, so be patient with us. Over the next few days, we'll try to get everything up and running properly. On Tuesday, September 5th, I will do a free webinar, a little tour of the different tools on the website. So if you've ever wondered how the market scan tool works, the sector watch, the different tools that we have on Stockscores, join me for that free event on Tuesday, September 5th. You do have to register for it so that you can get the link to the webinar. To do so, just go to the new Stockscores.com, same address as always, www.stockscores.com. And on the home page, just slide down to where you see upcoming events, and it's the event over here on the right, a tour of the new Stockscores website. Click on more info and you can register. I'll very quickly show you the new charts. The enter the symbol box is up in the top left. And if I type in the symbol, US symbols, simply enter in the symbol. For Canadian symbols, you have to put a prefix in front of the symbol. So if you want to look at Suncor on the New York Stock Exchange, you type in SU. On the Toronto Stock Exchange, you type in T.SU. Here's the chart of Microsoft, and that's the normal chart. However, we do have these new interactive charts. So if you click on interactive chart right there, you will see the new charting application that we have. You can actually make it really big on your screen if you want by clicking on the icon that you see right there. If you want to draw on it, you can draw, maybe make it something like this. And there is a line that I've drawn on the Microsoft chart. And again, if you wanted to make that really large, just click on that little picture and it increases it. And then if you want to go back down to normal size, hit the escape button, back down to normal. We'll go into some more of the features of the new charts and the whole website at that free webinar on Tuesday, September 5th. Again, register for it from the Stockscores homepage. All right, let's get into this week's analysis. And the main thing that stands out when I look at this chart of the S&P 500, this being a 30-day, 60-minute chart, is the real increase in volatility that we've seen since about the second week of August. And that demonstrates investor uncertainty. Now, historically, September is the worst month of the year for the market. And so it's not a great surprise that we'll see a pickup in volatility as we are coming into September. And the question is this the start of a correction or just a little bit of nervousness within the longer term trend? I'll try to answer that for you this week when we look at the next chart. For now, you can see that we came back a little bit this week. We had some upward price action this week, but we are still below that short-term downward trend line. We've got this little downward sloping channel there. And so what will be critical next week is whether we get a break to the upside through that downward sloping channel line, or if we roll back over and see more weakness. Now, it's important because when you look at the longer term chart, you can see there that we had 2 weeks of weakness, but the upward trend line, as I draw it across here, has basically held. It actually went a little bit below it last week or the previous week. This week it's held that, bounced back. So we'll see now if the market can hold that upward trend, or if instead we're going to break that and then perhaps test this lower trend line down here. So important things coming up as we come into August and whether the market is able to hold that upward trend line. Moving along to the Russell 2000, the small caps, which have really underperformed the large cap stocks in the US, and you can see that that continues to be the case. They also went down the last few weeks, but more so than the big caps. However, they are at support. You can see I draw a line of support there, and we're bouncing off of that now. And the question is, do we hold that and make a new attempt at breaking out, or do we break down through it? So again, the market is at a critical point on the Russell 2000 small cap stocks. Over to the Canadian market, you can see that we are also in this downward sloping channel, but in this case, we're actually in the middle of the channel rather than being at the top like the S&P 500. And the question is, do we test this low, or are we going to rally back and try to break that high? I would put this as a bearish chart because the tops are falling over time and we are basically at the lows from the last month. In the big picture for the TSX, this 3-year weekly chart, you can see that the upward trend line was broken. That is when I went bearish on Canadian stocks, and since that time we have been slowly moving lower, not sharply lower, not in a panic mode by any means, but still something to be concerned of. And I would also call this a bearish chart, although not a fearful chart. On the TSX Venture, which is the microcap stocks in Canada, we've had good stability over the last few weeks, but certainly no excitement. We need to get a breakout of this to the upside. That would be actually a positive sign, indicating that we're going to move up towards the 810 level on the TSX Venture. It's basically a quiet market, not uncommon in the summer. It is usually fairly quiet until the end of September, and then things start to pick up October, November, December. I expect that will be the case again this year. On to the Treasuries, U.S. Treasury bond market. This is the 20-year bond ETF, and you can see that it's slowly been moving up, which means interest rates slowly moving down, but certainly not the kind of volatility that we've seen in the past. And therefore, it's, to me, not an important chart right now. The bond market seems pretty dead and quiet, and no real strong indication of where it wants to go in the near term. The US dollar is right at support. You can see this important inflection point that is held up for about 2 years, as the low is where we are at right now. And the question is, do we hold that and bounce higher, or are we going to break down through it? If we break down through it, the US dollar has a long way to fall. And that is an important question then, and something to keep an eye on. Now, I would say that the US dollar is getting a little bit oversold because it's at the bottom of its downward sloping channel. It is also at support. So I think the most likely outcome is that it bounces higher next week, but I wouldn't be a betting man on that move because this has got pretty strong momentum to the downside. So another chart you want to watch closely. Many of the charts we've looked at this week are in that situation where they're at a critical point where they could turn one way or the other, making it important to watch as we come to the end of summer. On the gold chart, we have this resistance level that is held up now 3 times, and we continue to test it. So I think that if the market does see more weakness, you're going to see gold break out of this range, which will take it out of a range that's held up for most of, well, all of 2017. And that would put it up towards these highs up in here. So it has work to do. It hasn't made the breakout yet. I'm not a bull on gold yet, but it is starting to build some optimism and show some promise. On the US oil side, you can see that we've been drifting lower. If we were to look at a shorter term chart, it's basically kind of gyrating down on the daily, and that in a very microscopic way, breaking to new lows. But in the big picture, it's been stuck in the sideways range for about 2 years, almost 2 years, year and a half, I suppose. And therefore, neutral long term, medium term, I would call it bearish, short term, sort of bearish neutral as well. And finally, the fear chart. Well, we've seen fear come back down quite a bit, but it's still at elevated levels relative to where we were. And so I think the market's still showing concern, and that shows up in those equity charts that we look at each week. So my ratings then, neutral, medium, or pardon me, long and short term on US stocks, but at a critical point. Canadian stocks bearish in both time frames, although not, as I've said before, it's not really a fearful bearish. It's just kind of a drifting lower in complacency bearish. Gold, neutral long term, it's right at that resistance level, but it does have some upward momentum in the short term. And oil, neutral on the long term and the short term. Medium term, it's actually more of a bearish trend, but that may get snapped as we are closing in on some support areas. The market stabilized this week after a rough couple of weeks, and the upward trend line has held so far. However, there's still an increased risk for a market pullback. Gold is testing that resistance level, that ceiling price that has held up for all of 2017 and could break out. However, it hasn't broken out, and therefore we need to watch it. But if there is market weakness, I do think that gold will make that break. Oil remains in a downward trend, but it has the potential to break it soon because it's testing the medium-term downward trend line. And although fear has come down some, We're not out of the woods yet on the fear factor, so keep an eye on the markets closely in the next week or two. All right, let's get to the trade of the week. And something I found in the month of August is that my short sells have dramatically outperformed my long trades. And many of the trades I featured in the video each week have been shorts because that's what's working right now. And that may be telling us that weakness is coming in the month of September. We'll see how that pans out. This was a short trade I did on, I can't remember now, Wednesday or Thursday, on SJM, the Smucker's jam, basically. And you can see I've got my indicators on here. There's a little white dot there, which is what triggered that trade. It broke this trend line. There's all kinds of indicators on here, which are part of the active trader course. I won't go into too much of an explanation of those, but that's what triggered the entry signal. What's important to gauge is these risk reward lines here that tells you the profit for risk. And so in this case, this trade closed the day in around 7 to 8 RR. And that means that for every $100 risked, you made $700 to $800 in reward. Before commissions and slippage, mind you, but that doesn't lower it too much. And so it's a great trade. Those are the kind of trades we love to see. And there was a couple of them on one day, all short sells, that had some pretty good returns. Well, hopefully you've enjoyed this week's Market Minutes video. Please like it, subscribe to the channel, tell your friends, and most importantly, trade well.